Hey guys, how's it going? This is Max from CryptoPotato, and today we're going to see how to trade Bitcoin futures on Binance, one of the most popular cryptocurrency exchanges. As you may know, Binance launched a Bitcoin futures trading platform, and, perhaps somewhat expected, the trading experience is just as good as that on the main spot exchange. As a matter of fact, the futures platform had already surpassed the main spot exchange in means of daily volume, and it's quickly gaining steam. There are a few reasons for which you might want to consider Bitcoin futures trading. The first, short Bitcoin and other cryptos. Hedge your positions and improve your risk management to protect your crypto portfolio during bear markets. Next, open a leverage position. Trade without really owning the funds. And finally, there is no reason to keep large amounts of Bitcoin on the exchange because of the leverage. Bitcoin futures on Binance allow leverage of up to 125 times. However, you should keep in mind that it's advisable not to trade more than 10 times margin, since the higher the leverage, the closer the liquidation price. So, for the leverage of 100 times, 1% loss is enough to liquidate your position, and Bitcoin is volatile, as we know. Another thing to keep in mind is that margin trading is not recommended for beginners since it involves high risk and you can lose your capital a lot quicker. Now that we've gone through some of the basics, let's dive deeper into Bitcoin futures on Binance and how to trade them. First things first, you need to have a Binance account. The registration procedure is fairly straightforward, but it requires quite a bit of identity verifications because of Binance's thorough KYC requirements. Once you have registered, you will have to deposit funds to load some balance. This is done by clicking on the Wallet button on the top right corner and selecting the Exchange Wallet option, from where you will be able to choose the cryptocurrency you want to deposit. After the required amount of confirmations, you will get notified by email that the funds are deposited. You would have to transfer them to the futures trading wallet. On the top navigation menu of Binance's main website, there is a Futures button. Click on it and select the Futures option. On the bottom right section, right under the order books, there is a Transfer button. In order to start trading Bitcoin futures, you have to transfer some of your USDT to your futures account. Once you click the button, you'll be asked how much USDT you want to transfer and from which account. All that has to be done is to specify the amount and hit the confirm button. The transfer happens automatically. Okay, now that we have that cleared, let's see how to trade. Binance allows users to place trades with a leverage of up to 125 times. To set the leverage level, on the top left corner, there is a button right next to the BTC USDT symbol that can be clicked and it will put up the following slider. From here, the slider can be used to set whatever leverage is preferred from 1 times to 125 times. So, for example, if you decide to use $100 with a leverage of 100 times, this will open a position worth $10,000, and you'd only have to put $100 as a margin. So, for example, if you decide to use $100 with a leverage of 100 times, this will open a position worth $10,000, and you'd only have to post $100 as a margin. Margin leverage of 1 time means no leverage at all. After setting the leverage, there are 4 types of orders that you can use on the platform: limit order, market order, stop limit order, take profit limit order. Let's see how to use these orders. Limit orders are used when you want to buy a specific price. In order to set a limit order, you have to specify a price at which you want to buy or sell. Down below in the order quantity tab, you'd have to input the amount of Bitcoin that you want to buy. In this case, we've set a target price of $8,200 and a quantity of 1 Bitcoin. So, as soon as you see Bitcoin reaches $8,200, we will have an order to buy/long. We have a set margin of 10 times for this order. As soon as you hit the buy/long button, your position will be sent to the order book. We will show you where to monitor it and how to close it down below. Market orders. Market orders are the simplest way to open a position. They're used to buy Bitcoin at spot price, the best price available on the order book. To open, All that has to be entered is the order quantity here. Again, keep in mind the leverage. So for example, we are using a 10 times leverage note that the margin required is 10 times less than the actual value of the order. Stop limit orders. These are typically used as a stop loss mechanism, but not only. Now, the stop price is the price at which your order will become a regular limit order. The price tab indicates when you want to buy. Imagine that you can expect Bitcoin to face serious resistance at $8,200. And if it breaks above it, that would get confirmation that the trend is bullish. You would want to set a stop price at $8,200. And as soon as the market reaches it, your stop limit order will be converted into a regular limit order where you request to buy at $8,250. You can also use this as a stop loss mechanism to minimize your potential loss. Take profit limit orders. As the name suggests, this is mainly used to set a price at which you want to close or partly close your positions in profit. Your trigger price is when you want your order to be placed in the order books. The price tab shows the moment you want to buy. Okay, enough said. Let's trade and open a sample position. For the sake of this guide, let's open a short position on a Bitcoin to USD pair using a standard market order above. We are shorting 0.1 Bitcoin at an entry price of $8,060. Just a reminder, shorting means that we profit if the asset price drops. Here, we have opened a short position of 0.1 Bitcoin using leverage of 10 times. As you can see, the actual cost is 10 times smaller than the position size. As soon as your position is opened, you will be able to monitor its performance from this section on the bottom of the screen. As you can also see on the position tracker above, there is a liquidation price. This is the price that, if reached, will see your position liquidated because of insufficient margin. Keep in mind that the entire amount that is your futures wallet is used as collateral. Hence, if the price doesn't go in the direction of your trade, the platform will use your remaining capital as collateral. What if we want to close the position manually? Now, if you want to close this position, there are two options. A market close is instant, and you close at the best available spot price. The limit close lets you provide a price in which you would like to close the position at. Once the market reaches the price, the position will be closed. As soon as you hit the market button, your position will be closed and you will see the funds going back to your margin account. Let's talk about the fees. Perhaps one of the more important things to consider is the fees on Binance's futures exchange. This is especially important if you are day trading, as the fees can stack up fairly quickly. As it's almost always the case, Binance has done a great job of visualizing their fee structure. You can see them in this table here. Long story short, the default level, which is VIP 0, carries 0.02 maker fees and 0.04% taker fees. As can be seen in the following, in order to enjoy reduced fees, Binance requires you to both hold their native Binance coin, BNB, and maintain a decent amount of turnover volume in BTC. All of the VIP benefits of the spot market exchange apply to the futures market. What is more, the fees are generally lowered than those on the spot market. However, the volume requirement for each of the VIP tiers is 5 times larger than that on the spot market because of the leverage. What about the security? Another thing to talk about is the security of the platform. Needless to say, Binance is probably the most secure cryptocurrency exchange out there. Naturally, it's not immune to hackers, but the company is doing a splendid job in keeping the users' funds protected. Even if the exchange gets hacked, which it has in the past, Binance has introduced their SAFU fund. Starting from July 14th last year, the exchange allocates 10% of all trading fees into the Secure Assets Fund for users, what I mentioned before, in order to offer additional protections to users in extreme cases. The funds in this fund are stored in a separate cold wallet. Besides that, Binance has a very rigorous KYC procedure that applies to the futures exchange platform. And if you want to get support, When trading Bitcoin futures, it's also important to consider the customer support. Expectedly, the Binance Futures Exchange shares the same support as the main spot exchange, and users can rely on a team of experienced and highly adequate international support staff. In conclusion, it's safe to say that Binance has done a great job in providing users with Bitcoin futures trading. The platform is very similar to that of the spot exchange, which makes the transition very easy. The user experience is just as smooth and trading is fairly simple. Let's hope by the time you're watching this guide, Binance has introduced more trading pairs besides Bitcoin against Tether.